Good morning, everyone. I'm your host, Anne-Marie Band. Welcome to the Daily Edge on the Place Your Trade Network. We are the network that focuses on trading daily contracts using options that the CME Group has as event option. Wow, I've got my words all together here. To trade indices, energies, metals, and now Bitcoin. And these are event contracts. Today's broadcast is brought to you by TradeAid, which has built a custom app dedicated to trading the CME Group's event contracts. You can trade them on the custom app or using the Dome on the main platform. The first thing I'd like to do is welcome you to the Daily Edge. Let's hope that my tongue doesn't get sidetracked anymore, but I'd love to show you the site where you can come to. The first part of the morning is the dashboard, which I absolutely love. It gives us that live stream event pre-market. We've got our very own Chai Girl, and wow, was this morning's action-packed, especially with the news about Hong Kong and the distressed bonds in the China residential markets. Huge thing. And the big move of BlackRock bringing on the CEO of oil giant at Aramco to the board, and the next big thing showing that Russia is actually curbing its shipments, and that is really helping oil run off the rails. So this is the first place I go. No matter what you trade, this is super important. The daily gap stats talk about what is the likelihood of price action moving to the north if we open up at a certain area. And so today, metals, we see the copper has got a 54% chance of closing above the open, and its opening price was $3.80. Silver, I saw this morning, someone's bought 200 contracts at $24.90 or so, and they are hoping that the probability actually holds up with their profit factor. They look really, really good. This kind of stat is a little bit of a coin toss, so you don't want to touch it. And for crude, look at the move right here, almost 60%. It opened at 74.13. Profit factor is 1.6. So my thought is buy the dip right here. It looks absolutely fantastic. One of the next things that we have here are our option tools. This is someplace I visit consistently. When we look at the event contracts and we go to the session history, it tells me where people are positioning at the particular contract event. So notice the 4550s. There are a lot of big numbers for folks that have been buying since last night, buying the yeses at $10. Those yeses are now worth right around $18 today at this time. So you can see all through the day, all through the evening, where the positioning is and what traders are doing in general. I absolutely love it. Now, I want to bring on my guest, my friend, my colleague in all things trading, Brian Lund. Welcome, Brian, to the show. How are you doing?
Good. Thanks for having me. I have to tell you that intro music is so dramatic. It got me
fired
up. I feel
right?
like it's Gladiator or something.
We've actually had a couple of people really comment on that. I like it. It gets the vibe going, certainly.
You know, I just realized in the promo here, I actually wrote some stuff for TradeAid back in the day. I've got some articles up in the TradeAid Futures Trading blog. I just realized that. So
very cool. Well, everybody go check that out. Go check that out. Brian's been writing a long time in the markets, trading in the markets. You've had quite a journey. Tell us about that journey. What brought you into the trading space?
Wow. Well, I've been doing this for over 35 years. Well, I'm an old guy. And when I was a kid, I just was always fascinated by the financial section of the newspaper. Like I knew there was something going on in there. And if I could decipher it, there was a way to make money. And then when I was 15 or 16, my great aunt let me know that when she passed away, she was going to leave me a small portfolio. She was married but didn't have kids, right? And so that excited me because I thought, okay, I'll have an actual chance to get involved in the market. And I mean, this was a old school portfolio, like the most industrial of industrial, like amalgamated, horse carriage, right? Like all the stocks that Mr. Burns has in his portfolio on The Simpsons, right? Unfortunately, before that happened, my dad got sick. Was diagnosed with a brain tumor, and my aunt decided it'd be best to leave it to my dad and my mom because they probably needed it. So he got it. And then once my dad got it, I would watch him every day, get the paper out and write down the prices of each stock. There were maybe 8 or 10 stocks in a journal, and then close the journal. We did that every single day. And I'd watch him like every single day. And that went until October 19th, 1987, when all of a sudden he lost about 50% on his portfolio. That's the day that the stock market dropped 23% in one day. And I realized he didn't know anything. He didn't know what he was doing.
Yeah.
He literally was trying to pretend like he knew, but he didn't. And so, he passed away not too long after that. And then my mom compounded the mistake by selling all those stocks, right?
Oh.
So from a very early age, I was like, I want to have some agency in the direction of my financial future. And I felt like in order to do that, I needed to learn more about the markets. And I felt like there was something better than just listening to analysts or listening to talking heads on TV. And so in the early 90s, I found a group on one of the first online bulletin boards. It was the Prodigy Network, and it was called the Money Talk Bulletin Board. And there was a trove of old school technical traders there. Really old guys that were in their 40s. I say that because I was 20 something. But they had been around and they were talking about Gann and they were talking about Fibonacci's and things I had no idea. And they were kind enough to, let me participate. And what's funny is we actually, in a pre-social media day, in a ubiquitous internet day, we actually ended up having in-person meetings for a couple years around the country, which we called technical analysis on the net. And there were about 50 or 60 of us. And that was really my first introduction to technical analysis.
Awesome. Yeah. And now fast forward all the way up to here and
many years later.
Yeah. And what's one of the biggest lessons that you learned as a trader?
Well, look, I'm going to parrot what one of our friends, Brian Shannon, always says, is that only price pays. And I learned that lesson very early on with a trade in Oakley, the sunglasses, and that used to be ticker OO. And I had this fundamental thesis fed by, internet stories and CNBC about why Oakley was going to be great. And so I was building a position. And I was very cocky, and I thought I don't need to put a stop in because I know this thing is going to go to the moon. And there's been I'm on the West Coast, so the market starts at 6:30, and there's been maybe a handful of days in the last 35 years that I was not at my desk when the market opened. Ironically, 9/11 was one of those. But this was one of those days too. And I woke up and I turned on my computer and saw that Oakley had dropped like some ridiculous amount, like 40%. And what had happened is their main distributor, Sunglass Hut, was having financial trouble, and they were closing a lot of their outlets, and they were shipping a lot of glasses back. And instead of just taking the loss and moving on, I stuck with that narrative, right? That because what happens in those situations is everybody that's underwater with that narrative now wants to revise the narrative and tell you why it's still going to work out because they're desperate, right? And so I was listening to them like, yeah, that's right. They're going to find new distributors. And so I put more money into it. And basically over the course of 12 months, I lost 50% of my portfolio. It wasn't a lot at the time. It was, maybe $20,000, but I was, in my early 20s, and that was a lot of money back then.
Absolutely.
And so I said to myself, I'm never going to dig into a narrative. I'm always going to, if the narrative and the technicals are going in the right direction, that's great. But once they diverge, I'm always going to respect the technicals.
You know what? I'm really glad you brought up that narrative because that's sort of the anchor of what we're going to talk about today. What I have noticed in the real time of working in the markets right now, there is a macro narrative that has a long view of what's going to happen. And a lot of us that are being fed this information off the internet, we get it in these bite-sized clips. And then we use our short-term thought process against a long-term narrative, and we end up having a train wreck. So
Right.
how do we look at a narrative and say, okay, is this a narrative that's affecting price today? Yes, no. Is this a narrative that could affect a price tomorrow, 2 weeks, 2 months in the future? And then how do I choose which of those narratives I'm going to trade?
Wow, what a
I
question.
know.
How many hours do we have here, Anne-Marie?
I know. That's tough.
It reminds me of this tweet that I put out recently. Well, the first thing that we have to do is we have to be really honest with ourselves, right? And we have to really know ourselves. And I put out this tweet recently, and it's me saying I'm going to buy this stock and hold it for the next 25 years. It is a retirement stock. And then also me, oh my God, it just broke down on a 1-minute chart, right? So
Yeah.
So I think sometimes we fool ourselves to think I'm going to buy this stock, and no matter what happens, I'm okay with it. And then something happens in the right now, and we freak out. And that's an issue that you need to go to a psychologist, psychiatrist to figure out. But I think at the end of the day, we have to remember that we're here for one reason and one reason only. We are here to make money, right? We're not here to be right.
Yep.
We're not here to tell someone, hey, look, I got into this stock way before anybody else knew it. We're here to make money. And I don't know about, I can guess for you, but I'm going to say for me, it's not about making money to have things, right? It's making money to have freedom and to be able to take care of my family and to be able to have a good work-life balance. And so anything that takes away from that is, I have to guard against that. And so I think one of the problems is that people, they don't understand why they're really going into a stock. They don't understand why they're going into a position. It's very easy just to listen to somebody on Twitter or on TV tell you that this is a great stock. And look, I'm going to be brutally honest. It's really an excuse for not having to do the work, right?
Exactly.
And I think if you want to expand this to our society at large, I mean, nowadays everybody is either left, right, black, white. Everybody's taking these extreme positions, right? And again, I think that's because people are uncomfortable analyzing the subtleties of an argument, right?
Yep.
And I think that works in the market too, right? Someone will say, well, this stock and this company is going to do X, Y, and Z. And someone else says, no, it's not. And then they just go to the two extremes, right?
Yep.
Bearish, bullish, going to new highs, going back to the old lows. And what you really have to do is you really have to tune all that out, and you have to do the work to let you know, is this a stock I want to be in? And if I want to be in it, where would I be wrong, right? And what do I think this stock can realistically get to? That can be a fundamental methodology if that's what you want. I prefer technicals, but you have to at least put the work in. Otherwise, you're going to just you're going to pigeonhole yourself. You're going to dig in, and you're not going to be open to when the data or the fundamentals or the technicals change.
Yeah. And that's more of a cultural issue individually, maybe even a human issue in terms of where we are at this particular stage, everybody wanting to dig their heels in, in terms of, hey, macro bullish, hey, macro bearish. So you are in a particular frame, your particular narrative right now about the broad market comes back to the image that we showed last week with Brian Shannon about the 4 stages. And so we are in stage 2. For those of us who don't know much about stage 2, tell us what that narrative looks like.
Yeah, so let me just first say I'm not a expert on the 4 stages. Obviously, Brian is an expert. Stan Weinstein before Brian is an expert. So I would encourage everybody to get those books. By the way, I would encourage everyone to get this book. This is one of my favorite books ever. This is Anne-Marie's book.
You are so kind.
This is my autographed copy, by the way. So anyway, so here's my theory right now. My theory is that we are in the beginning of stage 2. Stage 2 is the markup stage, and it's the stage where you're going to make the most amount of money. I believe it's accumulation stage, markup stage, decline in the distribution stage, right? We just went through the decline in distribution stage in 2022, in my opinion, right?
Yep.
So then we went into the accumulation phase, and you can see this in a lot of stocks. You can see, our other mutual friend, JC Peretz, he said, that the market is doing better when stocks stop going down, and they have to stop going down before they start going up. And we saw a lot of stocks stop going down around October, right? So you look at a lot of stocks and they've flattened out, and now they're starting to perk up a little bit and break out. And that is the beginning of stage 2. It's a 2-1. I think there's 3 stages of stage 2. The point is that is when the most money is made in the market. And that's the stage when institutions that didn't get in the accumulation stage now need to get in. They need to catch up. That's when the public starts getting involved. That's when you start seeing news stories about these stocks. And these will drive higher and higher over months and sometimes years. So what I think is important is a lot of people may have missed out on that move from October till now. And I get it, right? It wasn't super easy to get involved there. It certainly hasn't been easy to stay long, right? I keep saying this is the market where I'm not long enough. But I think what's important is not focusing on what happened from October to now, but what can happen between now and new all-time highs and then beyond, and then figuring out how you can take advantage of that if we actually are in stage 2. And so that's one of the things I've been hammering home with my subscribers is don't cry over spilt milk. See where we can be. You don't want to look back 2 years from now and say, God, I saw these stocks breaking out of those long bases, but I was in denial, or had too much PTSD or PSTD, whatever it is, from 2022 that I couldn't act.
Right. And interestingly, I think the narrative for the macro about how bearish the world was in that bottoming space was really what gave a lot of people pause. Also, interestingly, I just read Howard Marks's latest memo, and my take was that he is feeling a bit of the same way that you are feeling at this space. So that's pretty good company, as it works.
I mean,
that's pretty good company.
I'm glad to be in the same boat as Howard. That's great.
Yeah. So let's talk a little bit about positioning when we see these moving averages and we say, all right, we want to look at the 50 exponential if it's rising, the 21 exponential if it's rising on your daily and weekly. But let's say I look at that and I see that things are moving. How should I look at positioning relative to risk if I see something like right now? If I just take a look at the E-mini S&P in the current contract, we are almost 200 points away from the 50, and we are 100 points away from the 21. So in these kinds of expanded spaces, how do you talk to the folks in your blog about positioning? What do you share with them to help them understand risk?
Yeah, well, again, a lot of it has to deal with your time frame, right? Are you a short-term trader? Are you a long-term investor? By the way, you can do these things all at the same time. Like I tell everybody that will listen to me, I tell people on the street, right? Before you put a dime of risk capital in the market, you have to have your financial foundation set, which means all your retirement accounts, your 529Bs, all that sort of stuff. You shouldn't be putting risk capital in the market unless you have that taken care of. But you can do those both at the same time. You can have a significant portion of your portfolio in long-term plays and also be trading short-term. So what I would say is we're in a super, super strong market right now. I mean, we've been above the 8 EMA so often since October. It's crazy.
Yeah.
In situations where I would normally say, okay, we have to, mean reversion. We have to at least get back to the 8, right? And we're not even doing that. But we will get back to the 8. We will get back to the 21, and we will get back to the 50. It will happen at some point, and that is part of a healthy market. So if you're someone that maybe missed out on that move from October, what you need to do is you need to be patient. It's hard to do, right? If you're not a short-term trader, if you're not a day trader, right? you miss the move, and that's okay, but don't compound it by then throwing everything into the market and then having the market correct 5 or 10%, and then you can't handle it and you get out, right? So what I would say is start looking for stocks that you're interested in being in, right? Stocks that maybe you think have a good fundamental case, stocks that are showing good relative strength. And then when those stocks come back to the 21 or the 50, start a position, right? And have a idea of where you know you'll be wrong, right? So you come to the 50, you hold, you bounce, you start to go back up. Okay, that's where you start a position. You put a stop in below that low, right? That pivot low. If the stock, if we're in stage 2, like I hope we are, the stock will continue to go up, and at some point it will come back down to the 50, right? And then you add to your position. You keep doing that, right? And if you break the 50 on this one, then you're out on that position. So you're laddering into a position with the idea, again, that we are in a macro move, right? We're in a move that is going to extend for a long time, and you're going to get lots of opportunities to build that position over time. And then if we start rolling over, we start breaking moving averages, then you're out, right? So it's patience, and that's one of the hardest things that people have. I have it all the time, right?
Yeah,
I tell people,
me too.
I just tweeted last week, or maybe it was this week. I said, if you want to improve your intraday setups and you want to get fewer whipsaws, wait at least 30 minutes to enter your trades. And if you want to do even better, wait 60 minutes. But it's hard to do because you see something gap up and it starts to move, and you say, I'm missing out. So I would say marry your methodology with patience. And again, think about what your time frame is. If you're investing for the long term, you've got plenty of time to get involved in this market if this really is the move that I think it is.
So if someone wanted to really get to hold your hand and have you remind them of those things that they need to do, you have a blog, right? Tell us about that. Tell us about that blog.
Yeah, I mean, I have basically a Substack newsletter, which started as a blog way back in 2007. And what
I'm still old school, calling them blogs. My apologies.
Yeah, no, it's interchangeable. But Substack's what the kids call it. So, and I'll be honest, is when I first started the blog, I was just writing what I thought, what I felt. I was talking about the market. I'd highlight stocks, but as I've moved forward, as I've gotten older, more mature, more focused theoretically, I've kind of whittled a lot of that down. And so my Substack newsletter focuses on I try to make it very simple, right? 3 things. The first thing is knowing what phase that the market is in, right? And that's different than we're in a bear market or a bull market. Like, where are we in that market? Just like the stages we talked about, right? You can take those 4 stages and you can slice them up into sub stages, right? Yeah. So are we in a pullback, in a uptrend? Are we in a rally, in a downtrend? All those complex things. So that's the first thing, identifying the tone of the market. The second is what areas are hot, right? What are the sectors? Where is money flowing into? Because it doesn't matter if you know what the market phase is if you're in the wrong stocks, right?
Right.
And then the third thing is surrounding yourself by like-minded people. And I do that with the Lund Loop Discord, which I call it the anti-FinTwit, because we all know that FinTwit is mostly a toxic swamp of horrible people, right? and you wanted unfiltered Brian, right? Here I am, right? And because it is a members-only Discord, if anybody gets out of line, I will kick them out so fast. And in 2 years, I've only had to kick one person out. So you marry those 3 things together. You know, what phase of the market are we in? Where's the opportunity for profit? And then here's that infrastructure that can help support you. And so that's what I do with the newsletter.
Excellent. Some really, really good stuff. And not only great for us to pay attention to, but simple enough to say, hey, what are you seeing? And then how do we make that work? So let's move right into the Trade-of-8 platform. Let's have a peek at the Trade-of-8 platform as it sits here. And we're going to look at the ES as it's sitting right now and think about those things that Brian has told us that say, hey, here's my 50 exponential, and here is the 21 exponential, the yellow one. The red one is the VWAP, of course. And so if we were staring down this sort of information, clearly it tells us days that we can say, I'm going to trade, and these are going to be the great days to trade, that you can take really strong positions as it comes back into that 21, or as it comes back into the 21 and the 50. So if we were looking at that and we moved it all the way in to, say, the 30-minute chart, and we're still looking at the same formations, we can easily see how we can use these event contracts using this very simple but incredibly robust approach. As it comes in the early part of the morning to hold the edge, because we have an upward sloping 50, because we have an upward sloping 21, as it comes into this 45-50 area, and we know in our setups right here that at 45.50, we also have a great number of traders sitting around in that space. We can do the exact same thing as it comes into the dip. Notice it's about $9 right there, maybe $8.50, cheaper than the guys who did it last night. And still, we're looking at that very simple approach. I love this, actually. I'm going to start implementing this, put some alerts here that say, hey, when do I come in to my 21 and my 50 together on the day? And as I hold it, can I buy that 45.50? And can it take me to those higher levels? And you can see right here, these are the calls to say, yes, I'm going to close over 45.50, or no, I'm going to close under 45.50. We get in at a fixed price, and the maximum payout is 20. And so this, to me, looks fantastic. I absolutely love this. I'm going to implement this and do some snapshots. Really, I have guests all the time, and many of them talk about specifically complex things that need an additional piece of information. But what you've done is really give us something beautiful. Hey, is my trend up? Great. If I come back to test it, I'll take it. And having that narrative that converges with price in that markup makes for an excellent win. I am super happy about how this sits right now. Again, folks, if you are looking at this, you say, hey, 45.50's 10. I know there's some of us that play these and we buy them really on the cheap for great ways and make tons of money, but 100% or near 100% isn't too bad if you're looking at this event contract. Brian, thank you so much for giving us something usable, functional, and simple. I love it. Folks, you can check out Brian on the Lund Loop. Brian's been my friend for over a decade.
At least, right?
I know. Probably coming up on 15 years. You, me, Pretz, the whole bunch.
Yeah, and look, and you won't say it, but I'm going to tell you, you're one of my favorite people. You and I have talked many times. It's Oktoberfest, yes, at Traders Expo, and you're the person, like, you know, when you're in a crowd and you're like, what am I doing here? I go, Anne-Marie, right? And I go, why don't we just go talk? You know, I think we're both kind of introverts too, right? So
yes,
that's kind of
we are. Right?
So you've always been one of my favorites. You've always been very kind and generous to me as well. So thank you.
Thank you so much. Right back at you, folks. Thanks for joining us on the Daily Edge, and we'll see you next time for some trading tips. Take care. Thank you, Brian.